The cracks continue in the labor market. It is Thursday, August 7th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell. Also, share it with friends, family, colleague members. But what we want to discuss here today is what we've seen from the labor market. And the labor market's going to take a lot more importance between now and the next Fed meeting, which is in the middle of September. So every week we get the jobless claims. And typically this isn't market moving, but it is something that the Fed's paying attention to and investors should be cognizant of as well. What we're seeing is that initial jobless claims for the week ending August 2nd, they rose to 226,000 versus 219,000. That still is relatively low in a historical context and would suggest that the labor market's continuing at a slower pace, but still continuing. But where these cracks are emerging is also in this continuing claims data. So these are the people that continue to file unemployment claims for being unemployed. And what you're seeing is that this now has risen to 1.97 million people that are filing for continuing claims. And this is the highest level we've seen since the end of 2021. So we are getting concerned here from the labor market perspective. It's nothing new from what we've outlined in these podcasts. But when you look at the labor market data we received last week for the employment report, these cracks are starting to emerge where the Fed should be able to, at some point, cut interest rates in the second half of this year. Whether it's September or December is still up in the air. We still lean in the camp that they're probably only going to be able to cut once. We're still in the camp that it'll probably be closer to December. And that's because the inflation data is still a problem. If you look at the ISM services report that we got earlier this week, it's showing you that prices paid on the service side jumped again. So inflation is still there, specifically in that sticky part of the market that the Fed's paying attention to. So while the labor market is weakening and we're seeing cracks emerging, this is going to be difficult for the Fed to decide which one they want to look at closer, whether it's the labor market or inflation. We think at the end of the day, it's going to be inflation, and it's going to keep them in a very difficult situation in the second half of this year. That's all we have. If you'd like a history of the podcast, you can go to marketswithmegan.fm. Thank you.